Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, gotta start the music here. A lot has happened in the past day. So let's come over and take a look at the charts. So yesterday we did have Powell speaking, and as I kind of warned in our private Discord, that was an event that is kind of like maximum opportunity to move the market in terms of a Fed speaker, and it did not disappoint. And the market taking it really hard and selling off with Powell not being as dovish as the market wanted. Now, in the overnight, we've kind of come back up. I think part of this might be like easing from China. Now we're also getting the port strike. I would have thought that would be something to push treasuries down, but I don't, know what the timing of that and all of that is. So I don't think that that's what that move specifically is, but we did recover the downside from Powell. Now in the S&P 500, oh man. Well, in the S&P 500, they took Powell pretty badly as well, but the end of month buying was insane. Remember yesterday, I wasn't really sure if there was a huge imbalance or which way it would be or anything like that, but it turned out to be a huge imbalance in favor of buying. Can you imagine where they would have gone if not for Powell smacking things down? That's a pretty big recovery and pushback in the S&P 500. So pretty wild over there. Oil is taking a hit this morning. My oh my. Now I'm a little bit unsure about what's going on in oil here because the events that I know of and everything that I read made me think that oil was going to be down. I think we should have a more risk premium built into oil. I think that we should be seeing more demand because of easing in China, but it's just not happening. It's just not happening. Gold and silver, though, they've taken a little bit of a pullback, but they're still looking pretty okay. Kappa off of its most recent highs from, again, China easing and really coming in and saving their economy in an aggressive way. Then we've got the yen. So, they were kind of on a downturn, pretty big up move here at the beginning of the week, and now kind of coming back, retracing that, with the dollar coming back to 100.77. So 70-cent move overnight, pretty decent amount. And Bitcoin, not having done a whole lot of anything since yesterday. Still kind of just, honestly, in my opinion, a little boring. So that's where we're at. Now, for news today, let's come in and write a new note. All right, so today we have JOLTS. We have ISM PMIs. Bostic is speaking. 52-week bill auction. Then late in the day, a bunch of other Fed speakers, but I don't know if we need to worry about that. And then we will mention port strike. So we get a lot of really key data this week, and the first set that we get is today at 10 o'clock Eastern time with the ISM PMIs and the JOLTS. Now with JOLTS, again, Jolts is one that it's missed and overperformed big time. And there's a lot of question about this report because a lot of those numbers are kind of like made up. So I don't really put a whole lot of stock in this particular report, but the market has been paying attention to it because Powell said something about it once. So that one provides a lot of opportunity for surprises. The ISM PMI is not as much, but it is manufacturing. So manufacturing hasn't been doing well, and I expect they probably will continue to not do so well. But you might want to look into the details of that report to see if there's, hints of inflation in it, right? So that's where we're at this morning. And then the big piece of news again is that we've got a port strike. Now, you would think that you would see like an immediate strong reaction in the markets, but this is a sort of a thing that it's not a problem until it's been a problem for a little bit, right? And right now, I think that, what's likely to happen is, we had a strike. They're going to continue to negotiate, and they will eventually come. I mean, eventually they do have to come to a deal. The question is just how long is it going to take, and hopefully it doesn't take very long. Because ports can't be closed for too long before it's a real problem. But today, it doesn't seem like the market is reacting too strongly to it. So, that's the first big piece of news. And then on the political front, Donald Trump visiting down in the Carolinas, hurricane-stricken areas. I tell you what, this news cycle did not look good for Joe Biden in particular and Kamala Harris. Everything that I've seen. So again, if I go on Reddit, I should see them praising Kamala's excellent response. And no, you're not seeing any of that. They're already ready to move on and not talk about the hurricanes. This after saying oh, those are red state people. We don't need to give them disaster money. So that's why I kind of feel that this news cycle is not going very well for Democrats. And the problem is that pretty much every news cycle this year has been bad for Democrats. So what you gonna do? And then on top of that, you're starting to see some polling showing a resurgent Donald Trump again. And Democrats tend to be they're going to win elections? Yeah. Democrats tend to be easily discouraged because their voters are a little bit lower propensity voters, people that don't tend to show up because they don't really pay attention and know what's going on. That's why Democrats are more interested in increasing turnout overall, because the more people that come out to vote overall, the more that Democrats tend to pick up relative to Republicans. But that also means that Democrats rely very heavily on this idea that they're going to win. You want to be a part of history. This was a big kind of narrative when it was Obama, for instance. Well, if the polling starts to show that you're going to lose, those people don't show up, and Democrats just collapse. So they're kind of teetering on the edge, I think. Hasn't happened yet. Maybe it doesn't happen, but they're kind of teetering. Amen says hi. Welcome to the stream. It was kind of funny yesterday. I had two crazy people on Reddit. And I had commented because somebody was like, why is the right, rising all across the world? It's not just in the United States. Well, yes, you would have thought if you're on that side of the aisle, you might think, oh, it's just all about Donald Trump. But then you see it happening everywhere, and then that kind of has to make you think, well, maybe it's more than Donald Trump. I say it's that working class people are not happy with the immigration and asylum policies in the Western world. I think that's the primary culprit. And that is just kind of a part of a larger kind of policy direction that we've been on for the last 30 years that is not very favorable to working class people. We export their jobs overseas, and then for the jobs that we can't export, we try and bring in as many immigrants as we possibly can to bring down the cost of labor. And it's very, very hard for where working people are at right now, and they're unhappy with it. And that's why it's happening across the board. But there were some people that disagreed with me. And one of them was like, no, it's because they're tired of their labor being saying something like very socialist. And I'm like, right, that's why they're going right wing, because they want socialism. That makes zero sense at all. It makes zero sense at all. But then there was another one that's like, just so overly confident that Democrats are going to win. I'm just like, all of the polling right now says that it's going to be very close and actually favors Donald Trump. So what do you know? I'm just so sick of, I think it's just a natural part of a website like that you're going to, like, the most overconfident people are going to yap. Seems to be what the deal is. Amen says, you trade live? Wow, it's hard. Well, so I won't be taking any live trades today, probably. When I do trade, I trade super, super small. So, like he's talking about handling psychology, by the way, because it's October, we need to switch our micros over. Talk about psychology. Well, it's a lot easier to deal with that when you're only trading $10 a time. Let's switch these. So in the micro treasury yield futures, I can take a trade. Each tick is $1. Each tick is $1, and an average size move is about 10 ticks. So it's not a huge deal. You can just go and trade one contract. You can trade $10 at a time, and you can survive a long time with that. And I've done pretty okay. Like, most of the time I'm paying for my data and fees and all of that, and I'm happy. I guess the thing is you don't have to come in and take insane risks and be like shaking in your boots the whole time in order to trade. Because like the reality is that when you're doing that, it really kind of hurts you. It really kind of hurts you. It makes it harder. Like what I think most people do, because everybody is narcissistic to some extent, right? We want to win. We like winning. Winning feels good. Losing feels bad. So what do? They set everything up so that like they never lose. So they'll do strategies where it's like, I'm only taking like 2 ticks and I can let it go 4 ticks against me. So in that situation, you're going to win 60% of the time simply by nature of the stop and target that you get, right? But the problem is that when you lose twice as much. And what happens if you have a streak of bad luck, or it's just the market is not favorable to that strategy? You lose several times in a row. What do? Well, I mean, that'll blow your account. And the problem in that situation is that you're so used to winning that you will just completely fall apart because you don't know what it's like to lose. So my recommendation is take equal risk reward. That gives you better feedback on the market so that you have the best idea about how well you're actually trading that day. So on the port strike, how much do you want to bet that Harris solves that? Well, hey, so I think you're on a good line of thought in terms of like trying to predict things that could happen that could potentially have market impact. But if Harris was going to quote unquote solve that, why didn't they already do something? They asked Joe Biden about it, and you know, he kind of gave some weird answers that I thought were kind of weird. Like, you know, they're negotiating. They don't seem interested in. And I mean, it's been a problem with the other disputes too. Like, remember the railroad thing? I remember the railroad workers, they were going to strike and they did strike. And then when they did strike, instead of like saying, you know, coming in and helping them negotiate and saying like, listen, this is fair and this is fair. Let's come up with a deal for the good of the country. No, instead they just said, oh, you guys aren't allowed to strike. And they left them high and dry. So I don't know what's going on there, but yes, probably the best political move that they could make is to come in and magically solve the problem. That would probably help her. Yeah. Not letting a good crisis go to waste involves letting it go down to the wire. I don't know if waiting until the strike has already happened is letting it go down to the wire. My guess is this. My guess is that just like everything else in the Biden-Harris administration, they're really not on top of it. They did not realize how big of a deal it is, nor did they realize how much impact they could have on it. And so it's going to become a big problem before it even shows up on their radar. And then they're going to come in and try and, like, quote unquote, save things after the fact. And because they're trying to insert themselves in at the last second, it's just going to go really badly for them. Right? Like if you wanted to be in a position to even make that play, I kind of think that you have to be a little bit more involved than they've been. Now, if she steps in, I kind of feel like it's a high-risk endeavor. I think Donald Trump could do similar, you know. Like, why can't Donald Trump come in and say, here, I'm going to help you guys negotiate, because I'm the master negotiator. You know, not as much of a risk for him because that's what he's the best at. But even then, it's, you know, maybe a high-risk thing because they reject the terms and that sort of a thing. Or if you really wrangle them into a deal and the union doesn't like the deal that you got. Is the DOM a tool to execute and context king? So I disagree with that statement. So I think what you're really getting at is that there's not an explicit edge to watching the data on the DOM, and that the biggest benefit from it is the DOM. Well, execution. So execution is a huge advantage. Okay, like executing on the DOM is really the best way to execute, and having that kind of level of execution is a huge edge. So I would say that the biggest edge does come from the execution. But I disagree with the idea that the data that you're seeing there on the DOM is not useful. And I think that this is born out of some creators out there and people that just don't understand how to interpret the data. Most of these guys are trading the S&P 500, which, let's be honest, man, the S&P 500 is just a lot of randomness. So your ability to predict anything in the S&P 500 with, you know, like equal risk reward is really hard. You're just anything that you're going to come in and you're going to back test in the S&P 500, it's going to come back to 50-50 because there's just a lot of randomness in that market. It's you know, 500 different constituent stocks. They, you know, and they're all doing their own different thing. That's just a lot of noise, right? But when you come over into an asset that's more of a pure commodity or the primary market where that thing trades, for instance, these treasuries, that is like the biggest market where the treasuries trades. There's broker tech and everything, but the treasuries, and especially the options on the treasuries, are where like the real meat of the action is and where you want to be watching. Another good one is oil. The oil is that's like the primary market for oil. Some of the metals, maybe not so much. So like you'd want to say gold, but there's like the London Metal Exchange, and there's a pretty big metal exchange in Shanghai. And so that one's a little bit more. But then like the ags, like corn, wheat, soybeans, those are all really good ones too to look for. So when you come over into those instruments, now you've got something where you can actually make some pretty good predictions. Okay. Now, those predictions are going to come a lot from information outside of the market, news that you know, context that you have about that market in particular that not everybody else has, and you combine those together, they can provide you advantageous opportunities to know which direction it's going to go before it goes in that direction. Okay. So where does the DOM play in all of that? Well, the DOM kind of lets you know what the current situation in the market is so that you can confirm if the flow that you want to see is actually coming through. So how do you do that? What is the reading of the DOM that people are missing? Well, many people will tell you that these level 2 levels will, can change on you at any second. That's true. That's why what you really want to pay attention to is how much is resting, how much actually trades. So if we were to tick up here, well, should I say tick down? I don't know. It looks pretty even, so I don't know if this is a good situation to go through this particular setup, but right now you don't see a whole lot at 21, right? There's 3,000 at 20 half. There's 3,000 at 21 half. There's, well, at one moment there was 800 at 21. Okay. So what typically happens in that situation where there's low resting liquidity is they'll just trade back and forth across that price for a long time and go nowhere. Okay. So that kind of tells you something that's like market makers aren't really willing to put a whole lot of liquidity at that price, probably because based on correlated instruments and everything else, they're saying, that's not a good price for me to, I want to bid at 20 half and 21 half, right? Okay. So maybe that changes though. Maybe all of a sudden 21 half. Okay. So there we just got an uptick. So now 21 half is 500 lots. Okay. How many did it take to trade? Because remember there was 3,000 there, but it only took 2,000 to trade. Okay. Well, 2,000 per price, pretty standard. Okay. If it had taken 5,000 to trade through that would have kind of been a little bit more interesting. That's like there was an iceberg under there. There was some big offers there, but the buyer was willing to buy through it very aggressively. So that is kind of like gets my attention. That's like there is a really, really aggressive buyer out there, and there are some sellers that are not getting out of the way yet. If, for instance, we traded iceberg, and then the next price, they hardly trade anything at all. And you can see the orders pulling before it even trades there. It's like it ticks up and like, they're immediately pulling 2,000-3,000. That's the market maker. He's getting out of the way, right? So what we call this is latent liquidity, right? Players have an incentive to not show the rest of the market what they're going to do. And so a lot of the liquidity doesn't show up until just before it trades. So that's why you have to watch how much is resting. And then when it becomes the best bidder offer, you're going to see a certain amount cancel. That amount that cancels are people that are just kind of waiting to get in line. Okay, so how much cancels is the key. And then how much actually trades is key. And that's how I determine what the latent liquidity is. So sometimes you are in an area where there's a lot of latent liquidity and there's really aggressive orders and you're able to move through that area pretty, and that's an active market. But sometimes you'll get these areas where there's like no latent liquidity. Like when it gets up there to trade, like there's no resting liquidity, hardly any trades to trade through it. That's an area of low resting liquidity. And those areas tend to kind of become sticking points. Like we will come back to those areas and we'll get stuck in those areas all the time, right? So now that you have all of that in mind, how can we use that to position ourselves? Well, we had low resting liquidity at 21. Okay, so assuming that we still have that situation, and I think that maybe we do, although, you know, it does look like there's a fairly aggressive buyer coming in here. You would prefer to be long below that 21, because the chances of us coming back to that 21 and getting stuck again are pretty high. If that big buyer that we think might that we kind of got a hint is there, if he's not really there, or he finishes, we're going to come right back to 21. And if you bought 21 half 22, you know, you might have to take a 1 or 2 tick loser. Right? So if I can be below the center of that zone, that's good. Now, if I can see that there's aggressive market orders coming in, and that was something I was anticipating, like the context that I had said that there's going to be aggressive buyers, an imbalance in favor of the buyers, then you can take it as a 22 as she goes, which is to say, I want to take it like when there's hardly anything on the offer and it's just about to tick up. I can take it as she goes, and then it should continue to keep going. Like if it doesn't hold, you just scratch it. Okay. Now in this situation, pretty good chance that you would be able to get filled at 21 half because there's an iceberg there, right? Okay, so do you see how all of these things that I've just discussed can kind of help you position yourself a little bit better and interpret what you're seeing in the market? Like, of course, I have an opinion based on the research that I've done about what the imbalance for the day will be. And I'm going to take the trades primarily on that. But I need to see that the market is actually like showing that I'm correct. And then when I can see that I'm correct, I can use the order flow to maybe get myself a slightly better position. Those are all things that help. So the DOM has very, very valuable information. The reality is that you don't completely understand what's going on in a market without the DOM. But it is a hard thing to read, and it takes a bit of time, and it takes a bit of instruction, which is what I just gave you and what most people never get. Now, let's see, you're lazy. I don't get how people trade 4-to-1 risk reward and be profitable, because let's say I am in DD. I don't know what you mean by DD. Of course, DOM is going to show more of trades that are against me. High risk reward means low win rate on trade. Yeah, see, I don't really like. Okay, so here's the issue. My gosh, this is such a stupid and pedantic thing that I'm gonna talk about, but everybody says it's risk reward, right? Risk reward. So does that mean the amount that I'm willing to lose, 4 ticks, and the amount that I'm willing to make, 2 ticks, and that gives me a high risk reward? It's equals to 2. And oh well, okay. That's kind of the language that we use in the way that people talk about it. When you actually get down into the math, you can come in and you can do this. You can say, where's my average winner times the win percentage minus my average loser times the lose percentage. And let's just say that that's going to be break even. Okay, equals 0, which really means these two are equal to each other and yada, 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 right? Well, what you can do is you can come in, for instance, the lose percentage is just going to be 1 minus the win percentage, right? So you get L there, and you got win percentage, okay, is equal to, right? Then what you can do is you can represent L in terms of W, right? So we want to say my loser is like what percentage of my winner, right? So in that case, what I'm going to say is, my loser is equal to X times my average winner, right? So then basically you end up with this X equals your average winner over your average loser. It's the opposite of what you had over here, right? So instead of saying risk reward, we call it R factor. R factor. Okay. Which is average loser over average win. Okay. So, if your winners are several times larger than your... Oh, wait. Do I have this backwards? I think I have this backwards. Sorry. The winner over your loser, right? So that way, if you have your winner is 2 times your loser, then you have an R factor of 2, right? Higher your R factor is, the more you make per winner compared to your loser, right? And if you have an R factor less than 1, then that means that the strategy takes on more risk than it makes, right? Once you set it all up like that, you get this, okay? The win percentage is equal to 1 over 1 plus R. 1 over 1 plus R. So let's say that our risk reward is equal. 1 over 1 plus 1. Because if risk reward is equal, then that means an R factor of 1. 1 over 1, right? Then the percentage will be what? 50%. Works out. What if it's 2 to 1? Like, let's say that our average winner is 2 times our average loser. Like that, okay? Then 1 over 1 plus 2, that is 1 over 3. 33%. So if you have, if you're looking for winners that are twice your losers, your win rates, your break-even win rate is going to be 33%. This is a really useful. Okay, now that you know that, whenever you're on forums and whatnot and people are talking about, what they're doing, you can immediately do all of the math, right? Okay, so another one, let's just pull out a calculator. What if R is 0.5? That is, our losers are twice our winners, right? So our losers are 2 and our winners are 1, right? 1/2. 1 divided by 1 plus 0.5. 1 divided by 1.5 equals 67%. Okay, so if you are taking on that kind of risk where your losers are larger than your winners, you're going to win 67% of the time. And you can calculate that very easily, and then you can look at them, what their statistics are saying, and that their statistics say like 80%, and then you go, oh, well, then that actually would be profitable, wouldn't it? Okay, now there's another issue. Markets are fat tails. So that means that you're going to get a distribution like this is a normal distribution where it's centered around 0. And, these are winners and these are losers. Most winners and losers are going to be like small ones. And every once in a while, you get winners or losers that are really big. Okay? Well, what we're doing when we come in and we say, I'm going to take this skewed risk reward, is it's kind of like pushing in. It's kind of like taking, imagine that this is like a piece of paper, right? And it's like you're taking your finger and pushing in on the paper, right? So you're trying to, so here we got our thing again. You're trying to shift it here so that more things come out in profitable, right? You're pushing it in. Okay? Well, here's what happens when you do that. When you do that, this tail gets twice as long. This tail gets twice as long. So you're going to have these guys and they're going to be like, oh, I'm taking, my losers are twice my winners, but I'm winning 80%. That means I'm profitable. And I've been doing that for a month. So that means I am now a profitable trader, right? Well, what's going to happen is they're going to trade that for 2 years and then they're going to run into this tail and they're going to blow their account. So you kind of have to be able to, and I wish there was math to be able to deal with that. Maybe there is a way to be able to determine when you change this is what it does to your tail and whether it's going to be a good trade-off or not. But what I would say is this. Almost every strategy I've ever seen has a streak of at least 11. Every back test that I've ever done, you'll have 9 to 11 losers in a row. So if you're taking your losers are twice your winners, like how do you get 11? Like the chances of that happening are like astronomically low. And yet every time that I've done a back test, it does that. So if you cannot handle 11 losers in a row, it's probably not a strategy you should be trading. A stupid thing when I see people don't take profit and some small ticks to their take profit to be true, or to make an X risk reward and sometimes their 5 tick take profit. Just I didn't understand what you're saying at all, dude. I was not following with that at all. So here's the thing. People will play with these. Hold on, let me try blowing my nose. I've had a little bit of a gunk in me. Okay, so the way that people mess with this is they'll do this. They'll come in and they'll take 3 contracts. They'll take 3 contracts right here. And then they'll say, I'm going to have a 4 tick stop. Let's say I'm going to have 4 ticks over on this side. And then I'm going to take 2 or 3, let's say 2 ticks over here. So the first one they'll take off at 2. And then the second one, they'll take off at 6. And then the last one, they'll let ride or something like that, right? So what happens is you take the trade most of the time, 60 to 80% of the time, you're going to get that first winner. Now, all of a sudden, this next one, whether you get your next target and this target far away, and I don't know if I have all the numbers completely correct here, but basically you can set it up so like now the probability of this next one happening, because this one is 4 away. Let's see here. I just I think my drawing here is a little bit, so now I'm going to try and, so if I say that this is 4 and this is 2, and then this next one is going to be 6. Okay, so if we come up here and we get our first one, so we made 2. Okay, now this stop is 6 ticks away, and my next take profit is 4 ticks away. So I'm still more likely to get this one than to get this one. And then the last one you just let ride, right? So what you've done is you've taken on extra risk, but for a very brief amount of time. A very brief amount of time. So you get that advantage of, taking the quick winner, And then you use that quick winner and you turn around and you use it to try and let the trade run. Now, the problem with this one is, again, what if it doesn't get to that first tick? What if it just immediately goes and stops out? Well, then the full loss. You don't take the full loss very often, but when you take the full loss, it's a big loss. And it's 3 contracts, right? And again, can you do that like 10 times in a row? That's where people get screwed up. Again, this can deceive you. It makes you think, oh, I'm an amazing trader, because it works out most of the time. This can be useful because time in the market beats timing the market, generally speaking. And so if you really, really want to make big profits, you kind of want to be able to let your trades run at some point. So that whole kind of setup can be really beneficial, right? It's just that eventually you'll run into that fat tail. So I wouldn't do that until you're an experienced trader, right? When you're starting out, trade equal risk reward. Make sure that you have a really good edge. If you've got good edge on equal risk reward, then you can do those other things and shoot for the moon, right? Another thing that I see people do is they'll do multiple contracts and they'll say like, this is 4 and this is 4. But then if I get, I'll take 4 tick stop, 4 tick profit, but then I'm going to take 2 contracts, right? And if I get the first one, then I'm going to move this other one up to break even. Okay, what you're doing by moving that up to break even is you're increasing the probability of you getting stopped out. That's really actually all you're doing. And so I've never had a strategy where I did a back test and I tried moving the stop to break even where that helped. And in fact, if we've traded a price, by virtue of the fact that price has traded, makes it more likely to trade in the future. So the chances of us coming up and then coming all the way back are actually relatively high. So moving your stop up to break even, I don't think is a very good, is not recommended in my opinion. And well, if it make you feel better, like, well, now there's no risk to it, but it generally decreases your profits in every back test that I've done. Okay, I can't differentiate between sideways action and reversal against me that would break even. Okay, so that's a good question. So the first question would be, was the move that we just had a standard sized move or not? So in the 10-year treasury, that's going to be like 4 to 6 ticks and a change in cumulative delta of about 10,000 contracts. That's going to be average move. So it's pretty easy for them to go from here, average sized move back. Okay. That's super common. And the thing is that like, if somebody comes in and buys it, and they buy 10,000 contracts worth and pushes it up there, right? And then they stop, it's going to fall back into that hole where it had, because basically this area is like the liquidity is going to look like this. The liquidity is going to look like this, right? Where the latent liquidity is going to look like this. And so when they push up like that, they just, it's like a hole. They just slide back down there. Okay. That's if it was one standard move. Okay. Now, if it's more than that, then you start to get into this square root law stuff where the impact kind of trails like that. And then when they stop, it's going to pull back a little bit. And so now if you miss this, you're at least getting this, right? Okay. Now, the thing that will happen though, is even if we have like a full-blown meta order that comes up and pushes it up here, if there's an opposing side, and right here when it starts to come back, if they then right here take an order, equal size, so this is 10K, and then this one is 10K, you see how that worked? See how now we're lower? And that's where you'll end up losing. right? That's why that ends up happening to you. Okay, so how do you catch that? It's going to be aggressive orders, right? You're going to see like your cumulative, when you look at that chart, you're going to see your cumulative delta consistently going up, and then you're going to see your cumulative delta consistently going down. So when you get to that kind of top area and you start to see the original meta order start to kind of chill out, normally and typically you'll see some pretty big transactions up there, and then again, low resting liquidity. Big transactions, it might trade through a couple of prices very quickly, and then after that, in that area where there was those big transactions, you know, they're barely even putting up 200 contracts. That's kind of like your low resting liquidity, right? If after you see that low resting liquidity, you start to see aggressive market orders the other direction, that's the reversal. That's the one that you got to watch for. And it happens a lot in markets, because like if you're a hedge fund and you're trying to maximize your impact, like you want to move the market to try and like jostle people out of positions and make people think that it's going your way, you maximize your impact. That's how you do it. And so when you've got a big winner like that, and you think that there's another leg coming in, like that moment is when you really got to pay attention, because that's when the reversal comes, right? Now, more often than not, what happens is the meta order ends and they do this, right? And the problem is that you didn't get in until like right here. That's kind of the way that things go, is that by the time you realize that there's a big meta order out there, it's already moved a ton. And you get in there, and then, you know, it comes just below your take, and then you got a loser. That's what happens to people. It really is. So how do you solve that problem? Well, okay, first one is know what the signs of that kind of exhausting is happening. That means you're seeing limit orders pull very aggressively. You're seeing big trades in that area. And after the big trades, there's not a whole lot of liquidity placed in there. And then it will kind of like, it'll just kind of like back tick. And you almost, I don't know how to describe it. It's just like you can just see everything shifts. All of the limit orders shift. And it's like the trend is over, right? And just take your profit there. So then you got that. Or even better, be in down here. Be in down here. How do you do that? How do you do that? Well, you've got to take it before it's happening. You've got to know that there's going to be an imbalance that's going to cause them to buy aggressively that day, long before it's really evident in the actual data. You got to do it before it happens. You got to be early. Of course, you want to have a little bit. Like what I would like to see is, okay, I'm starting to see, like the cumulative delta's been going, and then all of a sudden I'm starting to see this. Okay. And I was anticipating this, and I want to get in it here, and it should be going like 4 times that, right? And I got in here. But you can only do that if you were able to predict that the meta order was going to come. That's how you solve that problem. It's kind of funny when you really get into kind of like the math and of why the market behaves the way that it does and everything, like this square root law problem. Because when it comes down to it, like, what is this secret? What is the secret to day trading? Know what's going to happen. Just know what's going to happen. It sounds like this, like when I say it, it's like he is just messing with me, but like I'm dead serious. You just have to know what's going to happen. I mean, obviously you don't know for sure, but you should have a pretty good idea based on everything that's going in there. Somebody is going to come in and they're going to buy it. And knowing that big guy is going to come in and buy it or sell it in a day trader's world is literally the only thing that matters. And all of this other nonsense that you see retail traders talking about is people that just don't have a full understanding of the market, aren't able to really backtest their strategies and find out that the market is really statistically efficient in that none of those patterns really work on a risk-adjusted basis. So the only thing that really works from a day trading perspective is arbitrage and block trading, essentially. I come from charts. For me, taking liquidity is taking significant highs and lows that would mean low nodes of a volume profile. Your thoughts on what is true liquidity and have you used it? You go, well, I'm not going to take any trades, especially since, you know, we've got news at the top of the hour, right? So my thinking is, based on the news, we might get a big meta order that surprises, and I might take a trade. But before then, there might be. So what I'm anticipating that the manufacturing number and the jolts might be weak, and so you buy. So if I was really going to guess the news, then I guess it would be a buy. But I'm not getting enough of a consistency in the treasuries for me to be buying. I'm not seeing that consistent, you know, imbalance in market buys, essentially. Not yet. Okay, anyways. So what happens is you've got like latent liquidity. And as we trade, that latent liquidity gets exhausted. Okay, so the longer that it's been, the more liquidity will tend to be there. So basically, it's like if we just traded a price and then we move up, okay, that price, the liquidity there, the latent liquidity is going to be a little bit meh, because it's, you know, it just traded. They haven't had a whole lot of time for that liquidity to build up. And I'm not just talking about the resting orders, I'm talking about the latent liquidity, okay? And so what we find, and this is like really, I'm really giving you like a heuristic here, okay? This is like super generalized, okay? You can actually come in and you can say, based on how long the meta order that traded through it was and all of these other factors. But generally speaking, it's 45 minutes. It's kind of weird that it comes out to 45 minutes, but generally speaking, it's 45 minutes. So once it's been 45 minutes, that liquidity will have firmed up, okay? So that's why it's like, if we have a move up like this and then it comes back, then this period is the 45 minutes, right? Now here at this point, the latent liquidity is healed, and so, you know, the liquidity will be something like this, right? Versus, well, I guess it didn't draw very well. Like over here, it's going to be like really bad, right? And then over here is can kind of be a little bit more like this, right? So it will be easier for them to, you know, well, it starts to get to the point where it's just as easy for them to tick this price as it is for them to tick this price, and then they can move around a little bit more freely, right? 45 minutes. Now, if it's a new high or a new low, there does tend to be a little bit of liquidity at those highs and lows. So it's pretty rare that we would trade 23.5, for instance. Well, actually, let me double check here. Sure. Okay, so if we were to trade a new high and like there was no offers there whatsoever. Okay, so there does tend to be a little bit more liquidity at those highs and lows. There also tends to be more liquidity at even numbers. So an even number in the treasuries is half a handle. That's 16 right there. That 16 is 1. And evens, like 110 even there. Those are big round numbers. So at those numbers, you will tend to see more liquidity there. Like it's unusual that we would come to those prices and not see like at least 5,000 contracts trade the first time that it trades there. And then if, you know, beyond that, maybe it continue to go back and forth there. Okay. So if you're a big player and you're aggressively buying, yeah, there's a good chance that your buying is going to take you through that high. And so let's say there's this situation, you come through that high and then they're done. What's going to happen? They're going to fall back, right? They're going to fall back into the hole. It kind of depends on how big it was and all that sort of stuff, right? But so this is why a lot of people believe this whole idea that like there's a quote unquote liquidity grab, that they have this whole kind of setup that when you actually understand how a limit order book works doesn't really make a whole lot of sense, because they think they're going to shove it through there and then they're going to use that to like take their profits or something or go short and then shove it back the other way. And so you all go long and meanwhile he's going short and he makes money when it unwinds. Well, how is he going to do that? Because in order to make it go back the other way, you've got to have another meta order, right? If you buy it and then you immediately sell it, you're going to lose that right there, right? So that doesn't make any sense. What's actually happening is you're pushing into new highs because they need the liquidity because they're buying, and then they stop buying and it falls back. Maybe somebody takes it the other way at that point, but that doesn't always happen. Happens more often in stocks than it does treasuries, but no. So like the whole smart money concepts it's nonsense. Okay, but there are a few things that you can kind of determine about what liquidity is likely to be at certain key places. Especially, like, now this is the thing that I think is really funny, is that people tend to put more liquidity at round numbers. So there is, in reality, more edge in that a price has more zeros in it than any of this price action nonsense that people talk about. And that's stupid. At the first of the month, there will be heavy buying in TLT from Uzi, so I'm front running him. Oh, I didn't write down that it was the first day of the month. We should write that down in our things, right? First day of month. Okay, so that right there is exactly what I'm talking about. Do you see that? They traded 4,000 and then 1,500. Now, it was not a market order. It was not all one order. I didn't get any block trade alerts, but it was 5,000 contracts traded all at once. So that's a pretty aggressive sell order that really kind of destroys the upside case. I think that there's a really good chance that we come back to this 21.5, 21 area and kind of rest until the news now. But let's see if there could be a fight here. Maybe will there be a fight here? It's going to take months to take this. Well, yeah, it takes a little bit of time. See, here's what you should do. Okay, I just explained a bunch of stuff to you, right? I talk about this in my order flow video series. So like, you could do it today, maybe you wait a day. Like, you have to do it over multiple days, right? Because what happens is you learn something, and then when you sleep, your brain like starts making connections and stuff, right? And then if the next day you don't do it again, you just completely forget about it, then your brain goes, oh, well, that connection wasn't really very important, and eventually gets pruned. All right, but if you do it like 2 or 3 days in a row, then that information like really crystallizes. So you can do something like you listen to me talk about it today, then you go and you watch my order flow videos tomorrow, and then I have, if you go to speculatorseth.com/strategy.html, there is a strategy PDF. You sign up for the mailing list and it mails it to you for free. And that goes into like really, really detailed that I can only do in text, right? Then you go and you read that one. So now you've done it 3 days in a row. Okay. And if you really read it and you really study it, because the reason why you feel the way that you do isn't because it's a ton of information. Like, if it was really a ton of information, I wouldn't have been able to teach it all to you in 30, 40 minutes just now, right? It's that it's so new, it's so different from everything else that you've learned in trading that it's kind of like, whoa, right? So whenever you feel like that, really what your brain is telling you is, okay, I need to come back and read this again tomorrow. And when I read, and what'll happen is when you come back and you read it tomorrow, you'd be like, yeah, I already know all this stuff, right? It's just your brain is realizing I have to like completely reconfigure my neural network, right? This is the biggest problem in retail trading, I think, is that, you know, if you're going to trade discretionarily, you're building intuition, which means that you're essentially building neural pathways to try and interpret what's going on in the markets and predict what will happen. And if you spend all of your time looking at charts based on things that are really just random, then it's garbage in, garbage out. Your brain is building all of these neural pathways based on something that doesn't do anything, doesn't help at all. And then you come in and you actually learn the reality of the markets, and you try and readjust your brain to go and say, okay, okay, what's going on here? I think that there might be a big piece of news here or something. I mean, some of that we're at the open here, but I'm getting something. Do I have? Oh, you know what? My news squawk was crashed here. Let me fix that. Did I miss a market headline? Something happened there. Look at that. Like I mean, it might be a little bit too late, but that would have been one that we probably should have tried jumping on when it busted that high, right? Man, what was that? What was that? That was nuts. You're out +4. That was me buying 1 share of TLT. My gosh. No, I'm not seeing anything on Twitter. There must have been, so my guess is that there was some sort of a geopolitical event. Okay, like this looks big to me. This looks huge. I'm gonna mess around with Sim a little bit here. I mean, like, I would have preferred to already be. Oh man, it didn't even fill me. Ugh. Senior White House official tells me that the United States has indications that Iran is preparing to imminently launch a ballistic missile attack against Israel. See, I told you. I was like, yeah, it's got to be. When I don't get it right away, it's a geopolitical thing. Well, I'm going to guess that this is going to go pretty far, and then later in the day it might come back hard. This really kind of screws up the whole plan for the day. I don't know. I'm kind of thinking, so I'm not going to mess with this. That this level of volatility can kill accounts. so I don't think that I should mess with this. But I'm kind of thinking about fading it because. So I could do it on Sim. Let's just kind of see. I want to kind of let it sputter out first. I don't want to take it as like an aggressive trade the other way. Because I don't think that the headline really justifies the amount of movement here. So like if Iran shoots a ballistic missile at Israel, and then Israel shoots the ballistic missile down, like big whoop, like that's already happened, right? It's gonna have to be like way more than that. So I'm a little... okay, so there's some big trade up there. So I think I found a decent spot. It's just I'm a little bit worried about that the pace of the volume is still coming through, right? Oh man, oil, yeah, oil is up pretty up $2 almost. They're thinking about it here. Okay, so Axios is the one reporting it. My news squawk was a little late on that one. That sure came out of nowhere, didn't it? That was not on my bingo card for the day. Well, let's change the title of the stream. What was the timestamp of the original block order that started the move? Oh, I don't know. Like the thing was is that there was never like a really clear one, but the move really started at 9:33. 9:33. But remember that at 9:30, the S&P 500 open, there was some big volume that really kind of caught my attention as well. And that one, but that was like a sell. So that's the thing that's really, really weird. I'm kind of wondering on that one. I'm kind of wondering, okay, like say you're a bank and you get a call from some guy in the State Department that like gives you tips and everything. You go, oh, okay. So like this is going to hit the market here any second now. We got to get ahead of it. But what should we do? Let's sell a little bit of it to kind of get the market off kilter and then we can buy it back up. So that could be again them trying to make this sort of thing happen. Right? That might be one explanation for what happened, because the sell before it was awfully odd. But I don't see... Oh, actually, maybe I take that back. Look right there. 9:32:53 was when they started taking it out with really big block orders. Okay, so now we're getting White House comments saying that if Iran does anything, it will have severe consequences for Iran. Okay, so can I show you something? Coming over here to the chart. What does that look like? It's the square root law. It's just like what I said. They will find it difficult to move outside of this area because like the market knows that it's all buy and the liquidity evaporates. So now if the meta order pauses, which I think probably will happen because everybody like, okay, now we all know what the headline is. The opportunity to trade it is past. Now some big guy might come in and like decide to push it again. Just I mean, that is a possibility, but probably what's likely to happen is, right, 45 minutes. But let's see. It doesn't look like the market orders have died down yet. So that's the first thing, is I want to see like market orders coming in really aggressively. They trade a ton in that area, and then the market activity dies down. Perspectives you made my day. So did you bought your TLT? That's crazy. One thing also is there's that 115 there, right? So that's another spot to watch. I guess, you know, so we don't have to think about this situation very often, but in the square root law literature, they find that like there's a square root law, which is the impact of the meta order scales with respect to the size of the meta order as a square root law. But then there's like a breakout point. There's a point at which there's so much is traded that the market makers and everybody else can't handle it, and the market just goes crazy. The market just goes crazy. And a headline like that
block sell
is the kind of headline that could make that situation happen. So that's also something doesn't look like it's happened yet, but that's something that we got to be aware of as well. By the way, when I did try to take a trade and it just didn't quite fill me, like how mad should I be about that? Oh, do I not have, where's my, come on. Maybe I don't have one. I was trying to find a profit window. Orders. 27. So it wasn't terrible. It wasn't terrible. If I had really been on my toes, we really probably could have gotten like 25, huh? Your timestamp was at 9:32. That is something else. That is something else. Okay, is it gonna go? No. Still in the hole. Okay, so we just got the S&P PMIs. There was some polling in the DOM for that. They got 47.3 versus an expected 47. In 15 minutes, we get JOLTS and ISM. Well, if that ISM ended up being really good, like let's say that ISM came out, they're expecting 47.5. Let's say that it came out at 51. I don't think that that's what's going to happen, but let's just say that it did happen. That would probably be the most, that would be the funnest thing that could happen. Let's put it that way. That would be the funnest thing that could happen. Can you imagine if it created some really strong reason to sell treasuries? That could really inject some chaos into the market. But in this situation, I think it's hard to predict because, let's just say that it's like a moderate miss or a beat on the PMIs. would the trading from that PMI, what would that be in relation to the size of the people trading on the Iran headline? Well, because that was what? 30,000 contracts? PMI is usually going to be more like 15, 20,000 contracts. So maybe those news events just don't matter in the context of the day. I tell you what, it's been a while since we've had a really good news trade like this. I'm a little disappointed that I well, you know what, but I need to, even if I say I'm not going to trade, I really need to prepare myself still, right? I think that's a mistake that I keep making. I've just gotten too comfortable and laid back. But it's okay. I feel like that this example gave us a really, really good example to describe some of the empirical behaviors of markets and watch it all happen, huh? And of course, like, what was the real edge in here though, right? Know what's going to happen. Know that Iran is going to shoot a ballistic. You know, if you were in on that headline early, you probably could have taken more advantage of it. In this particular instance, we were a little slow. And that tends to be the case on the geopolitical risk headlines. It's like they're big traders, they get it before we do. Sometimes like 30 minutes before. Sometimes I've seen some situations where it's like 30 minutes before we figure out what's going on. Oil is up 2.4. Oh yeah, you're right. Well, on mine it says 2.2, but that's pretty big. Who's the biggest loser? Bitcoin. Oh, Bitcoin is getting destroyed. Oh, that is so interesting. Now, why would Bitcoin react to that? Because Iran is funding some of their stuff with Bitcoins, aren't they? I don't know. That is curious. That is curious. Prior to the Iran stuff, there was a buyer in the 5-year notes, very slowly walking the market bid. We'll see if he's still there prior to Chelsea, but wouldn't be surprised if he's done. You're just talking about some big order that's like stays 2 ticks away. Okay, well, that was the slump that we were kind of talking about. Okay, so here is the point where if somebody wanted to take a really risky trade, they start hitting it with market orders and it comes the other direction. Now, the problem is we've got news in 10 minutes. Is it 10 minutes? Yes, 10 minutes. We've got news in 10 minutes. So this section, this area right here will not be healed. So if we get that news and it's bad for the treasuries, that's going to be ugly. I don't think, you know, if I was a hedge fund saying, this Israel headline, it doesn't really make sense, I think you sell it, yada, yada. But do you really want to do it ahead of the news? I don't think that one really makes sense because you don't know what the news impact the news could have, and you don't know what the news is actually going to be. So you wait until after the news. But you could see something like the news comes out, it's perfectly in line with estimates, market kind of ignores it, doesn't do anything, and then you start to see people sell on the reversal of the Israel trade, right? So we should keep an eye out for that one too. I don't know. I mean, if it's on the best bid, best offer, then that's different from if there was a big order that was a couple of ticks away and kind of following it around. So when it's a big order, it's kind of following it around. there's different reasons that happens, and I don't know if there's really much reason to really pay too much attention to those. More broadly, though, I think the thing that's interesting about this one, so like Octavius, he was in a trade and he was long. Why was he in a trade? Well, because it's the first day of the month and treasuries tend to buy on the first day of the month. So he made a pretty good winner on that. Was just kind of pure dumb luck in that. I think he probably still would have made money on the trade, but in that instance, pure dumb luck. Get a big winner. Or like Uzi there. Went off as soon as he bought it. That's curious. And it's even more interesting that he bought it because it sold pretty aggressively there at first. Like, do you see me? Because when I saw that selling was like, I don't know if I really want to test it now. And then you started seeing orders going the other way. I was like, what? Oh yeah, that's true. You're right. That wasn't like a day trade for Uzi. That was just, I was planning on buying some more TLT today. Happened to be at that point. So funny. I tell you what, this is why I like one of the things I like about the ZN, like, I really feel like that for this YouTube channel that we may just always be on the treasuries because it's the best to teach you with. That square root law behavior is so obvious, right? Everybody thinks that it does this because that's what it looks like in a lot of stocks, but that ain't in it. The real behavior is the square root, and in the 10-year treasury, the behavior is so obvious. So all of these empirical properties of markets that we like to talk about, are really visible in treasuries. Okay, now that was kind of like maybe what I was looking for. I'm a little bit weary about there's news coming in. But there was an aggressive sell there. It popped after I bought TLT. I heard your block alert as I was buying SGov. Oh. Wait, what is SGov? I'm too lazy to look it up. You can tell me what it is and why you're getting into that one. Well, let's go and read. Let's see. Zero Hedge has a story about it now. Let's go and read what the story is. Axios is reporting that the White House has intelligence saying Iran imminently plans to carry out a missile attack on Israel in retaliation for the Friday killing of Hezbollah leader Hassan Nasrallah. Am I the only one that feels like Nasrallah sounds like a too obviously evil name? Anyways, senior White House official has said the United States has indications that Iran is preparing to imminently launch a ballistic missile attack against Israel. We are actively supporting defense preparations to defend Israel against this attack. A direct military attack from Iran against Israel will carry severe consequences for Iran, the official continued. Crude prices immediately responded to the headline. It seems that the White House is prepared to defend Israel militarily, although there has been no official authorization in Congress. Pentagon on Monday confirmed that it is sending a few thousand additional troops to the Middle East to be on standby, if needed, to defend Israel from broader attack. This is widely being seen as preparation for war against Iran if needed. This is to include the new deployments of squadron, blah, 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 blah. I don't know if, Meanwhile, Lockheed and Northrop shares touch session highs. So everybody's down except for defense companies, huh? Okay, I park my money there while I have no real trade ideas. It's stable as crap and pays good dividend. You know what I've been thinking about lately? Of course, it's now I think about it now that I don't really have the extra capital to deploy, but you know, I keep saying, well, I want to buy something, but like, what should it be? Like, how should I determine which stocks to buy or to not buy? And then it kind of hit me that like developing like a truly like what is the optimal decision is impossible. You just need to have something that's good enough. Get into the things that interest you and that you think are important for the world, and also happen to be good investments as well. And you know, just do your research and you'll get better at it over time, but it doesn't have to be an optimal decision. So yeah, but I might have to sell some of that. We'll see. I think I'm okay for this month. So 27. So by the way, did you see like when it was like really odd? So just exactly like what I was saying earlier, right? When I said, okay, well, maybe I should do something because I think that this could continue even though I don't completely know what's happening. And it was at 27. And oh, guess what happens? It's like right there, right? It's like, again, you get that square root behavior. Starts from here, goes over to here, and then it pulls back like this, right? And you end up getting in like right here. Because you're late. I could have done it at 24 though, then it would have been a good trade. My mustache is tickling me today. Guess I need to go and trim it a little bit more. Kind of cleaned it up yesterday. I think it looks pretty good. The dividend is, let's see here. It always dumps when its dividend comes through. Then it rallies about 43 or 44 cents till the end of the month before doing it all over again. And the dividend is 43 cents a share. Huh. That is interesting. Okay, here is the poll for the PMIs. Let's pull up a chart later. Of course, we've got this news coming. Oh, man, I tell you what, there's still some... that's a really confusing looking DOM to me. So seeing those like big 500s still sitting out there. Ooh. Okay, Jolts was higher than forecast at 8.74. ISM was slightly lower than expected at 47.2. So Jolts last time was 7.67, and that was like a big miss. They were expecting similar, but this time it was a big gain at 8. Okay, so that had a, you know, that did exactly the sort of thing they were talking about where it can come all the way through, but it recovered it very quickly. That sure was exciting to watch, though. It wasn't that many contracts that sold it either. It was just like the pull and the whole context around it and everything. It just had a really strong impact. This is dangerous. Okay, so there's some 4Ks stacking. This is getting interesting. I said, well, maybe the number comes in line. I would say that Jolts was out of line, so they sold. But then that just gave the people on the global risk headline opportunity to buy more. And so now they are buying it up into the highs and extending the highs. Wow. Not what I mean. I was kind of right on how it was going to go, but then it did something completely unexpected, right? Was it VWAP? Well, on here I got 22. Yeah, it literally retraced the entire Israel move and then almost immediately reversed and went higher. That is so. Oh, we haven't had a trading day this interesting in years, guys. This reminds me of when Donald Trump was president. This reminds me of like the trade war days. I remember there was this 1 week when Donald Trump was tweeting about trade wars and stuff like that, that the markets like really were roiled. Okay, it's moderating a little bit now. Huge negative. Oh yeah. It was like I want to say 20. Well, I don't know, 20,000 contracts net negative in ES, but it was already down 50K. Oh, I asked about the job hunt. Well, I've got 2 interviews today, so let's see how it goes. I sent out a lot of resumes and I still have a lot of them to come back, but there was a lot that rejected. You know, there's this whole thing that like I don't, you know, a lot of these jobs are fake and like nobody's really looking at them and that sort of a thing. I do think that people are looking at them, which kind of makes me wonder in some instances, because I'll look at it like, okay, like I haven't been going through and like, ooh, okay, big offer at 28.5. I don't. Ooh. This is now I'm super worried because that looks a lot like the whole thing that started this was like kind of some weird aggressive selling out of nowhere. Anyways, so I don't like optimize the resume to like every job posting because like it matches the job posting really well anyways most of the time. But I think that some companies are really hyper specific. It's like you have to be using your experience has to be in exactly the same stack that they're using or they don't hire you. And those ones are probably like they're real and somebody is looking at them, but it's like they have to have that most absolute perfect job candidate before they do it. Versus the other ones where it's like if somebody suitable submits a resume, they just immediately don't. But then there's a bunch of them that like I haven't gotten so you don't know if it went into a hole or what the deal is. And I'm worried that some of these will be like, they'll come back to me in like 3 weeks and I'll be like, well, I already had a job. I already have a new job, so sorry. You're too late. Now, on the split side, I've had a lot of issues with the computer systems that do the unemployment benefits. So I'm still working that out. But I think after, you know, sitting on phones all day on hold and talking to multiple different people and everything, that I've got that one sorted out, and that should be able to get them moving on that today. And then we'll see. I had like this little project that I was doing. I submitted that to those guys. It was like a little bit of a break yesterday. Probably should have done some reading. I could have probably maybe finished that book. I don't think I want to do my recording today. I think I want to do my recording when my wife is home. That way, if the kids are being naughty or whatever, she'll take them downstairs or outside or something like that. Plus, I've got this. I got a couple of things sitting here in the room that are kind of like in the way, because I want to set it up so that like I set the camera and I can just like leave it there. Because if we end up, you know, if this extends and we end up making a ton of videos, right? I want to have to completely rearrange everything every time. So very interesting that aggressive sell was, it ended up being a buy. This is small. I'm probably splitting hairs, but I find that interesting. It came in, it was so aggressive, and then we're a little bit higher. What about oil? What is oil at now? Almost 3% in oil. Wowzer. Surprisingly enough, the dollar didn't actually necessarily do anything. Oh, that kind of bothers me a little bit. What's with that? How much did the dollar move? 10 cents? Third leg of what meta order? In the treasury? There definitely appears to be a little bit of a liquidity hole right here. But like, there's still pretty active trade going on, so. Oh, from the bid open? Well, that might be. You might be right. Like maybe you're a big, you were having to buy all day today anyways. This would really kind of screw you up, right? Because you're going to end up getting much higher prices than you would have otherwise. And they might not be done, and they might be starting to, you know, put in another leg. That's possible. Because you might say, well, the liquidity hasn't recovered yet, but I don't know if we can wait, because, you know, if they continue to keep going up, we can't afford that. So we may just have to start executing earlier than we wanted. They seem to be shying away from trading above that 115 even for the moment. I don't know. I'm still trying to figure out, like, is this a case of robots just overreacting? Because I'm not sure I see how this, unless Iran is like gonna shoot a nuclear missile or something like that. you know? But we had this episode before, and Iran shot a bunch of missiles, and Israel shot them all down, and then everybody chilled out. If it's a nuke, say hello to a nuclear winter. I tell you what, man. Like, I don't think that anybody's stupid enough to go and shoot a nuke at like a major population center sort of a thing. But I could see somebody using a tactical nuclear strike, like Russia in particular. This is where, you know, it's just like to clear out a battlefield sort of a thing. I think that's a very real possibility. It's not something that I'm going to say is likely to happen, but I think it is like a range of possibilities that we have to consider. Like when I started to see that movement, that was the first thing that crossed my mind, was like nuclear attack. So do you guys remember, I think this was at the beginning of Trump's term, but it might have been before that. I'm not 100% sure. No, it had to have been in Trump's term, because I remember talking about it on Discord, and Discord wasn't around in Obama's term, or our Discord wasn't around in Obama's term. There was like the nuclear attack sirens went off in Hawaii. You remember that? Oh man, and those markets flipped. They absolutely freaked out for like 20 minutes. And then everybody said, no, false alarm, it's not happening. Uzi remembers that. And that some conspiracy theorists still say, actually, somebody did shoot a nuclear missile and we just shot it down. But man, and the reaction was not dissimilar from what we saw here. So I think it was a little bit bigger than this, but was not too far off from it. So when I first started to see the action, I kind of thought something really bad has happened. Like, it's got to be geopolitical in nature, because it's not like being disseminated to the market all at once, but it seems like it's a really big deal. But now that we know what it is, I am still kind of like, is that huge of a deal though? Well, oil's certainly been interesting this morning. Well, I want to know why it was selling off overnight. Like, what was with that? Senior White House correspondent tweets the U.S. expects that the potential forthcoming Iran attack on Israel could be similar in scope and scale as the attack back in April, per U.S. official. Ah, good catch. So you know what that means, right? That means that like they looked at it and said, "Oh, hey, the markets are really freaking out about this. I didn't think that they would think it was such a big deal." So now they're reminding them, hey, remember when this happened like a month ago? It wasn't a big deal, so chill out. Right? Okay, so did you see right there they took out that 30 and only 700 contracts traded? So there's still a hole there. You'll start to see it over time because, like, look at how much is traded there. Right? You'll start to see that huge spike in the volume profile. Because basically what happens is they can't get away from that area, and so it just trades back and forth. Liquidity still looks a little damaged, though. Like, look at those 2Ks and everything. Doesn't really come back out until 27. That's interesting as well. There's still a lot of jostling around, though. Okay. I still kind of think that there's a really good chance that they sell it back down. But how that's going to play out is a different question. But we're getting into the time period now where if somebody wanted to take a risky play and trade it, they might. It's just, I'm kind of wondering if instead it kind of turns into a slow burn where all of these guys that got long just slowly but surely give up on it. Here's a question for you, since it's a topic in crude. Is it immoral to trade oil when... No, it's not. It is your moral duty to trade the market when these things happen. listen, when big market events happen, that changes the value of things. That's going to change the supply and demand of things. That's going to change the value of things. And we need people that are willing and able to take on the risk of trading those things during those volatile times so that we can have a clean functioning market that can give us accurate prices. And so there's absolutely nothing wrong with, yeah, there was a war over there, you know, there's going to be a ballistic missile strike or whatever, and buying treasuries into it. That's what we're here for. That's what we're supposed to do. Okay, where it's immoral is where you start to do things like you make bad things happen. That's immoral. I really feel like that attitude, I don't know, this John Kramer guy, I don't know who you're talking about, but you're not Jim Kramer? I don't think Jim would ever say that though. But you know, there seems to be this broader idea that like the people involved in markets are just leeches on society, and it's bad when they make money and yada yada yada. But it's really, you know, it's an essential function of the way that our society works, that there needs to be a way to, you know, transfer this information about supply and demand. And the stock market, financial markets are the best way that we have to do it, because there's really no other way to give people incentive to aggregate all of that information together. So markets, I think, you know, so there's this idea like, okay, capitalism isn't perfect, but it's like the best system that we have. And so then the socialist kind of people are like, well, yeah, but can't there be like an even better system? Well, okay, so what would that better system look like? And my argument would be that there is really no other practical way to transmit and convey that information than a market. I don't think that you can do it otherwise. Because like, let's say that you just forced every company to connect to some sort of computer network where real time they transmit all of their information, and then there's some sort of an algorithm that decides prices, right? Well, the problem is, like, what incentive do people have to participate in that system then at that point? Especially, you know, if the robot makes decisions one way or the other way, and then anybody that would be on the bad side of what the algorithm would be has, you know, they're not going to try anything, right? Versus in the system that we have, everybody has an incentive to participate, and they can all try whatever they want, and they have the freedom to innovate and do whatever, right? So I really don't think that there's a way around markets. So if there's a path forward, the path forward is just having better functioning markets. Understanding where the deficiencies in financial markets are and finding ways of dealing with and compensating on those. You know, like understanding that it can incentivize short-term profits at the expense of a company's long-term well-being, and have rules that prevent companies from doing those sorts of things, like doing stock buybacks on debt. Right? That's where I think there needs to be change in our society, and the change shouldn't be away from financial markets. And that is our role. Like, yes, you're just like a one little retail trader in here and everything, but the reality of the financial markets is that they don't work without that. Yeah, most people are trading noise. Most people they don't make money from it, and it's just pointless. But there needs to be liquidity for there needs to be noise for the market to even function. Otherwise, there was not enough liquidity for the informed traders to trade against, and there's not enough activity for the market makers to have an incentive to put anything up, and the whole system just falls apart. So it's a tough job, but somebody has to do it, right? And those of us that are autistic enough to be obsessed with it, that's our calling in life. They go to their 9-to-5 job. Well, we do. Well, most retail traders don't, though. Skill issue. That was fine. Are they gonna pop back up there? It's kind of hinting. Yeah, autistic enough. Well, like real talk here, though, right? Like, in order to be obsessed with the markets enough to put the time in and everything, knowing the probability of success being so low, there has to be something a little bit wrong with you. There really does. There's something a little bit wrong with me. I'm more interested in this than would ever be justified by the reward. Yeah, it's like you're either autistic or delusional. Yes. And part of the message of this channel is, if you're delusional, you should probably quit now. If you're autistic, here's a way forward. I just noticed that you got the sealed bump. Yeah. I don't remember what the deal was. Somebody requested it and we had some space and we put it down there. And the computer can handle it, so why not? But most of I really hardly ever pay attention to it. It sure did move today though, didn't it? It's kind of funny to think that here now, an hour later, that we're still at 3.7. That's the square root law. Oh, dude, I totally forgot. There's a debate tonight. This is the vice president debate. That one's going to be interesting because I don't think Waltz is a good debater. He's probably not going to be the best debater. So it's going to be interesting to watch. Oh, they're going to go again? Or are they going to do a head and shoulders here? This is kind of starting to look like a right shoulder. Not that right shoulders mean anything, but it's still fun when it happens. Well, interestingly enough, on Reddit, there's a lot of stories about the port strike. And what time is it? 8:30? Oh, we're almost done. Every time that we get here, I'm tempted to like just keep going, but then I'm like, no, we got stuff. Let's do stay focused, Seth, and do the work that you've got set out for yourself. Don't just stream all day. That would be pointless. I can't imagine these streamers that they're gamers or whatever, and they literally live stream like all day long. That would get old real fast, I feel. Like just streaming for 2 hours and talking for 2 hours is a lot of energy. Those days when we have Federal Reserve days, which I don't know if I'm gonna do the Federal Reserve one in the future. It probably won't be as big of a deal as this last one, right? And it's not like that many people come in and watch them. But though I'm so tired after those. Yeah, I'm sure. Well, I'm sure that if people are giving you thousands of dollars in donations, it's okay. But you know what? Like most streamers, it's like they stream all day and they might make $50,000 a year. Like it's not a super great living for them. There's only like the top 1% that really makes big money from it. Pareto distributions. You know, when you think about a Pareto distribution, because I kind of feel like the answer kind of lies in the math of that, right? Why do you get Pareto distributions? Because success breeds more success. So in order to become one of those people that are like really at the top of the stack, basically when you're successful, you have to take all of that success and turn around and turn it into even bigger success. That's how it works. If you just go, okay, I'm rich now, and you sit on your laurels, then you never. That's why you stop. That's why you don't become the billionaire. There's somebody on YouTube. On YouTube? Well, so I tell you what, man. I've seen some streams here on YouTube, and they get decent viewership, and I'm always so perplexed as to why they have so many viewers. Like I've seen some streams where like nobody even talks on the stream. Why do they have so many viewers? It doesn't make any sense to me. But there's no point in dwelling on it or trying to make sense from it. Maybe if I was doing stocks, there'd be a bigger audience for that, and it would, we would take off. But tonight's debate is sponsored by Tampax. That's freaking hilarious, dude. Oh man. I mean, I'm not gonna say that it's gonna be like a disaster, even if Tim is a bad debater. He can prepare himself really well and probably survive. And the vice president debate is kind of a sideshow anyways, but I kind of got a feeling that it's going to be interesting. Kind of got the feeling that it's going to be interesting. How he performs isn't going to matter. It's how the media tells him he performs. Well, I don't know if that's going to work if he really steps in it, though. Like, and you know, like, again, there's this thing that I'm kind of seeing. It's different this time around, man. I'm telling you, like, the media reaction to things really is different. And while they did kind of go all in on Kamala Harris was the winner on that last debate because you know, she performed okay. By and large, the media has not been giving Kamala Harris the free card that they have in the past because they don't think she's going to win. And I think the media is very concerned about their reputation if they really were all in for Kamala Harris and she lost. Yeah, all he needs is one viral line. Maybe. One viral line and, like, no big mistakes. That's the but I mean, that's the real problem here, right? Is that Tim is likely to make a big mistake. And Vance will probably really capitalize on it. You know, like when he called Kamala, it's always like he says a word kind of wrong or slurs and then it comes out as prostituter instead of prosecutor, or, you know, things like that. Like, that's the kind of mistake that I think he could make. I love the way that Kamala handled the hurricane. Well, like, that's a good example of where it's like, I wouldn't say that the media is attacking her on it, but everybody's kind of been looking at this like, what are you guys doing? Like, Donald Trump was down there helping, visiting the sites, and where's Kamala Harris? Where's Joe Biden? They're like nowhere to be seen. It's crazy, especially for those of us that are old enough to remember Hurricane Katrina. Because the whole thing with Hurricane Katrina was like, this was this huge catastrophe and lots of damage done and many people died. And then George Bush said, I'm not going to go visit because I think that we'll just get in the way. And the media absolutely threw a conniption fit and just eviscerated him for it. Otherwise, that election for him would have been easy. But that really, really hurt George Bush's popularity. Now, why isn't anybody saying anything about that Joe Biden is on vacation, basically, essentially, while this is all going on? It's pretty crazy. Yeah, I'm telling you, man, it was crazy. So I was a little bit insulated from that because I was a missionary at the time. So and then I came home like a year later, and people talking about, and I saw all of the politics that had been surrounding it. I was just absolutely blown away. I was like, I can't believe that people were playing such dirty, nasty politics with a natural disaster like that, right? And then like the cake on the top is that my understanding, or at least what I'm hearing from some people, is that there was more property damage and loss of life with this last storm than there was with Hurricane Katrina. I was in Ian 2 years ago, and we couldn't even get a bottle of water. Jeez. One of the things that's been confusing to me is like the Republicans are all saying that there's not any money for their hurricane victims, and the liberals are like, oh, it's a good thing that Joe Biden signed the order to give them money before anything else happened. So like I'm a little bit uncertain about like how much money was given and what is necessary and appropriate and all of those sorts of things, because I'm hearing completely different things from other people. Oh boy. So Andrew Tate has just tweeted a video of himself that drawn out here. I'll just show it to you. It says, "Daddy's back," with a $sign in front of it. What does that mean? I don't know. I kind of want him to. You know what, Andrew? You were entertaining for a while, but then when you kind of disappeared, I was kind of like, you know what? This is actually nice. I don't have to see your face every day on TikTok anymore. Is it a cryptocurrency? I mean, that's kind of what I'm thinking, is that he's gonna have a crypto. He's pushing something dirty, man. One of the things that's been driving me crazy, absolutely crazy, in my quote-unquote job search is that some of the opportunities that LinkedIn promotes to me and seem like the best fit for me are in crypto-backed companies. I'm like, no thank you. So one thing that happened was I got these, I think it was a message from a recruiter, but I can't recall now that I think about it. No, this one was one that I saved. And I looked into it, and you had to sign up on their website, and like once I got into it, I realized, oh, this is like a cryptocurrency backed expert network. So it's like one of those websites where people can put themselves as experts, and people can pay those experts money to get like 30 minutes of their time or whatever to get consulting with them, and it's all like crypto backed. And then at the same time, I got a message on through email about another website of a similar nature, but it wasn't crypto backed. That was like the exact same thing. And I'm like, there are already websites that do that. So like, it seems like this particular idea for some reason is like way oversaturated. And I was like, this is probably not the first choice. It's probably not the first choice. No, I went to Costco after the stream to stock up before the strike, and they ran out of toilet paper and paper towels. Please, no. Well, it's really Walmart that's supposed to like take the biggest hit, right? Okay, Brannigan Barrett, he tweets, once this Iran risk clears, 2-year bonds are vulnerable to a sharp sell-off. That job openings data challenges a 50 basis point cut and suggests a far more robust labor market. Yeah, I mean, I'm still really skeptical about JOLTS and if JOLTS really matters. But I do think that there's a possibility that the treasuries could slowly but surely come back down over the course of the day. I need paper towels and paper plates, and them effers better be there. Well, yeah, he's in Florida. You guys in Florida. Well, I'm sure that things will be wrong. I'm sure that everything will be fine. This, they'll come up with a deal, within a few days. They better. I tell you what, like the worst, I feel like the worst thing that could happen right now in this market is a supply side disruption that just completely kicks the market down, right? Because if you get another bout of inflation, we have to spike interest rates and stop it and all of that, then you're almost certainly to have a recession immediately after that, right? Is it good for Trump? I kind of don't think that it is, though, Octavius. I mean, like, is it good for Donald Trump's election chances? Maybe. I question if something like that is already too late to matter. I honestly feel that we've got this vice president debate, and like that's the last kind of meaningful event that happens, and at that point it's like all baked in. And of course there could be some risk events and other things that happen that change, but you almost kind of you have to, those are, you kind of have to bake those in too, because you know, like the campaign has no control over that. But all of the things that like the campaign can do about anything, it's like it's already passed. And the economy, I feel that the economy is baked in as well, because like we're a month out. So like even if the economy took a huge hit, it would be too late to have an impact. Remember that the 2008 crisis happened basically the beginning, well, it was September, wasn't it? No, when was it? October? Maybe I'm wrong. No, there was some big days in October. It would have to be a meltdown like 2008 for it to really matter, I think. You know, and so like you kind of get a situation where it's like it should be good for Trump, but it's too late for it to really matter, and he was going to win anyways. And then he has to deal with the aftermath. It could be an October surprise for sure. One of the things that the ILA wants is, yeah. Is it an end to automation? Basically, they've been investing in automation stuff and they want them to stop that. Which kind of seems like a non-starter to me. Like, you would be really, really harming yourself in the long run if you're not allowed to do any of that, right? So, granted, the ILA has a pretty good negotiating position overall, but yeah. My reaction when I read that last night was the same. I was like, oh, But that's been a thing in a lot of the yeah, our suffering is their bargaining chip. Did you see that interview from like the lead of the ILA? He was describing like what happens. Right? Nobody can import any cars, so car dealerships can't sell cars. Those all go out of business. He just started going down the line. This goes out of business. It was kind of like, holy shnikes. This could be super, super bad if they're not able to come to a deal. It's interesting that you come out on the side that he's drunk on power. Well, I mean, maybe he is drunk on power, but I kind of thought that you would be more partial to being sympathetic to the union. I don't know. Like from my perspective, like, yeah, these people make double what, like the guy that's the leader of the union, or just the people that work at the docks. I'm sure that the guy that's the leader of the union makes too much money. Sure. Yes. But the dock workers themselves, it kind of seems like, hey, you know what? Probably they should make more money. No way, really? A dock worker makes 6 figures out the door? No, really? And you make 6 figures, and how? Well, so wait, how do you get 6 figures though? Because like, what are the skills that you need to get into it? Because it doesn't seem like a super skilled job to me. Are there like certain certifications and things that you've got to do it? Like, dock workers on the East Coast make 30. Well, okay, wait, let's see. what is the name of this? ILA dock workers average pay. ILA members make a base salary of about $81,000 per year, but some can pull in $200 annually with large amounts of overtime. Okay, but that's in left-wing areas. So like, you have to take a third off of that, and that's like maybe 50, 60K a year in Utah terms. So that's maybe slightly above average, but that's not rich. For comparison, if I were to take a job in Miami and move to Miami doing what I do, or to New York doing what I do, I would probably be getting paid north of $250,000, $300,000. But here in Utah, it's like way less than that, which is actually a huge advantage to me. So, cool. You're still got like what, 5 minutes? Their benefits are probably really good. That might. I don't know, man. It's supply and demand. Sometimes companies kind of have the power in that sort of relationship, and so unions can form together to ensure that the labor supply is accurately represented in business transactions, right? Kind of seems to me like they have a good case to be made that they should be paid more. Just from like a, what bargaining chips they have kind of standard. And I'm kind of partial to this thing that like working class people, wages have been suppressed. Like, it doesn't make any sense to me that you can have these people, they sit at home all day and hardly lift a finger and hardly do a thing, and they get paid hundreds of thousands of dollars. And, like, there are jobs that are very, very productive, and they are making that much value. But there are other people that, they don't really do anything, and it's just kind of the culture of it and everything that they get paid a lot when they really don't deserve it. And meanwhile, people that are literally destroying their bodies every day doing backbreaking work don't get paid squat. And it's like, well, why don't they get paid very much? Because it's unskilled labor. There's too much labor supply. But I don't actually think that there's that many people out there willing to do that job. That's why you have to import. That's why you keep wanting to import them. These jobs used to pay more. Well, dock worker, $80,000, not too bad. There's other people that are in other kinds of jobs that are very labor intensive, and they're barely making like 30, 40, 50. Kind of crazy. You need to have 300,000 in Miami to have a decent life. Yeah, that's what I hear. I'm not actually sure if dock workers are labor intensive though. Yeah, it's probably not like, well, I mean, it's a physical job, but it's probably not labor intensive, huh? Like, it's not labor intensive in the way that like ditch digger is labor intensive. Yeah, like if I had to drive around a forklift or operate a crane all day, I don't know if I'd call that labor intensive. I think it's still a lot more tiring than sitting at a desk all day, though. Yeah. Now that's the thing that I kind of am interested is, like, do you have to do a certification to do a crane? how much skill is involved in running a crane? Like maybe there actually is a lot of skilled labor involved in it that you wouldn't realize. At the same time, if they're really that concerned about the job being automated away, I don't know. How skilled can it be if it can be automated? I don't think that these robots are as smart as everybody says. That's why I come down on that one. Because the robots I've worked with are freaking stupid. I saw some video out of China where they operate some ports remote. Well, yeah, like they're already doing that in the United States, right? Remember when we had the supply disruption the first time around? And one of the things I remember them talking about was like, well, you know, we have this huge backlog and everything, but one of the things that's about to happen, I think it was in LA, was that they were automating a part of the port. And once they were complete with that project, that would like greatly increase the amount of supply that could come through. So you know what, Tetris is actually an interesting case because you know what, you can program an AI to play Tetris, but I'm gonna bet you that like the top Tetris players would probably still beat the AI, assuming that you didn't cheat with the AI and make the AI be allowed to do moves and reaction times that are inhuman. But like this, there's actually some really interesting strategy involved with Tetris. Once you really get deep into the system, there's like different stacking tactics that have different advantages. So that's why competitive one-on-one Tetris is still a thing. Otherwise, you'd think that it's just something that's been completely solved, right? But it's not. It's dynamic. I hate the co-pilot. Are you talking about like for coding jobs? Something that I remember happening at my last job a lot was like you'd ask somebody a question that you think that they should know because they have knowledge of those systems and they do that thing. And some people don't like being asked questions, man. I'm kind of like, if it seems like people don't like answering questions, that you don't want to work in a place like that, because that means that people don't really know anything and it's easy to get rid of you. But people would like just ask the question to ChatGPT, like that. Let me Google it for you, but they would just ask it for ChatGPT and then take credit for ChatGPT's answer, and ChatGPT's answer was always wrong. Yeah, the Microsoft. See, the problem with like Microsoft Copilot is, okay, if you're doing a task that's like a common thing, then you do the Copilot and it writes it for you and it's great. But it's doesn't know how to do anything that hasn't been done before. And all of these kids are relying on it and not learning the problem solving part of coding. When I code, man, I'm usually like just 100% problem solve. Like, I'm looking up all of the syntax as I go along and everything. Unless it's C#. C# I've gotten enough that I pretty much know all the syntax and things involved. But, you know, it's more fun to do it that way. I don't know. Anyways, guys, it's time for me to get going. So, I think that the title that we got on here is okay. I was, you know, remember I was a little bit concerned, like, I think that they should eventually come back down, but it might take them a long time to do it. And sure enough, they're not coming back. So that was a, you know, really interesting day, mostly because it shows all of these properties and situations we were talking about really, really well. So I think if you're somebody new or, you know, wanted to watch a stream, today would be a really good stream to watch. But anyways, it's time for me to get going, so I will see you guys tomorrow. Wish me luck. We got a bunch of stuff to do today, so stay excellent.